Oil has retreated from early highs. The enthusiasm over the coronavirus vaccine is fading away ahead of the winter season. Markets are now focused on the virus spread and lockdowns. Meanwhile, the ruble has been advancing for 6 weeks in a row, so this rapid rise may be followed by a sharp pullback. Recently, investors have been downplaying the pandemic news and focused on the vaccine instead, anticipating quick economic recovery. However, the possibility of a total lockdown in New York announced by the city mayor has dampened investor sentiment. The situation is getting worse in the US, and the number of new COVID-19 cases has hit new record highs. In addition, Germany is ready to step up pandemic restrictions starting tomorrow. The UK and Ireland are also likely to tighten lockdowns. All this can affect the European and global economy. Market participants are moving away from risk assets. On Tuesday morning, the sentiment in the global markets was moderately negative. However, the progress on stimulus talks in the US may increase risk appetite. The expectations of the Fed's meeting outcome also hold back the bearish trend. In the meantime, oil edged lower, with Brent falling below $50 per barrel. WTI futures contract with the nearest expiration left the level of $47 a barrel. The OPEC Plus forecast has added to the market pessimism as the cartel has downgraded its outlook for the oil demand recovery in 2021. Thus, the optimistic scenario for the energy market may not be confirmed, and this is not only due to the pandemic. The OPEC is changing its strategy. It will probably maintain the prices below the levels that have previously allowed the US producers to rapidly increase shale oil output. At the moment, oil has closely approached this level. In the short term, the energy market is unlikely to enter a serious correction. The lockdown measures will limit oil quotes to some point, but major oil consumers will continue their operation. Positive vaccine news keeps supporting the markets. Therefore, oil may be trading mixed, with Brent holding near $50 per barrel. On Monday, the ruble fell considerably lower against the US dollar, having closed the session with 1.2% losses. The downtrend in the oil market has triggered a correctional decline in the ruble. It seems that the ruble has been overbought recently and is ready to pull back, so the level of 73 per dollar is now hard to reach. Today, the Russian currency is again heading for the upside. The dollar-ruble pair was down by more than 0.5% in the early trade and retreated to the 73.50. In the near future, the ruble will gain support from the upcoming tax payment period in Russia. If Brent settles near the mark of $50 per barrel, the ruble may strengthen. However, the worsening background may put pressure on the ruble, so the greenback will then try to win back its early losses. The dollar-ruble pair is expected to trade within the range of 73 and 75 in the coming days. If the pair sees no downward drivers in the short term, it may hit the target of 76. The Russian market will be focused on the policy meeting of the Central Bank of Russia on Friday. Tomorrow, investors will await the auction on federal loan bonds. Besides, traders will closely watch the Fed's last policy meeting this year. That's all for now. Thank you for watching and stay tuned.